Hey, what's up you all? It's Miles here. Here, as a finance and investing channel, I do not want to bring politics as much as possible. I want to focus on my topics related channel, but sadly, political war creates some sort of economic problem. In this video, I hope we can understand more about the crisis and how it can seriously damage the global economy and affect us as investors. At the same time, I'm sure that you are curious about what my thoughts are on the crisis. I'll share in short. You also want to watch this whole video. First thing before continuing the video, let's hit the subscribe and like buttons for the YouTube algorithm. A war often starts because of politics, but the economics, not really. The economics usually goes well. I, personally, do not like the more government controls our country. I believe that we, the people, should be running the economy. The Russians protest and don't want a war, wanting peace. It's all about the man, Vladimir Putin, and the Russian oligarchs who wanted to start the war to invade the Ukraine land. So you see, it's where the politics really start a war. Now you can see how a war damages our economy. I want you all to watch this whole video to understand how we can prepare ourselves for the global economic war, and how we can play a better strategy in a situation like that. When we invest something into a market, we need to understand what's happening in the world as it affects the market condition, such as housing or stocks. We want to be prepared so that we can adjust better in unexpected conditions. Personally, I am not a fan of watching or timing the market. I would rather not look and focus on a recurring investment. But sometimes, in some situations, I have to take action to secure my assets. I didn't mean to be financially secure, like play along safe, but I want to reduce my risk by keeping income constantly coming to me during the market crisis. The war can cause serious damage to the economy due to increasing government spending. More on oil and gas. That means we will see oil prices going up, and GDP will drop, more depending on the government spending. Since the war started, there are some economic sanctions. They create some sort of serious problem for the global economy. When a sanction happens, it's a goal to oppress another country's economic system. Like when the US and other EU countries united and sanctioned Russia to oppress the economy of Russia. The sanction doesn't just affect on Russia but other countries as well, limiting trading in goods and services. We will see more inflation, a rising in prices. Supply will decrease because the USA, depends a lot on other countries for goods and services. That means we will be more limited on our own. We will have to create more domestic products. It can be good news as we are probably going to see more workforce in the USA. It means more supply will come, and demand possibly drops as well. But inflation possibly continues because of limited trading in goods and services, and we still have the ongoing pandemic. It isn't fully recovered yet. I'm not surprised that the government spending and debt will significantly increase as the government will need to spend on weapons and militaries preparing for the warfare. The interest rate will go up, as I explained in the old video that the interest rate would go up in March. But now we have the war, meaning the interest rate possibly goes up 2 times and is higher than what we expected. Let's say in March we will have about a 6% interest rate. But we have the war now. It's possibly going to 11 or 12%. What a tremendous rise. The war and the rising of inflation and interest rate, all the three heavily impact the stock market and housing market too. It's getting messy. March will be the worst month of 2022. It can continue until the next fall. It's still uncertain when it will recover. Plus, tax rate will raise. Historically, we have a low tax rate. The last time we had a high tax rate was during WW2. It was very high. The top wealthy people had to pay at about 90% marginal tax rate during that time. You can see the tax rate. Since then, we have had a low tax rate, 40 to 50%. Still not low, but the war and rising of inflation and government debt I'm not surprised tax rate will raise. Now, you can see why I explained earlier that I don't like politics getting involved in the economy. I wish they could be separated. Unfortunately, political disaster causes to increase in tax rates and interest rates. They would affect the economy, like crashing the stock market and businesses struggling big time. You will see many businesses going out of business during the war. This reminds me of WW2 and the Great Depression. I am not surprised if we had the other Great Depression in March or April. But you don't have to really worry about money crises like the Great Depression because you know we have a law called FDIC, Federal Deposit Insurance Corporation, to secure bank assets. Let's say you have all of your money in Bank of America, and Bank of America goes bankrupt. The whole money will return to you. You keep it. FDIC insured only covers up to $250,000 per individual or $500,000 for a spouse. For sure, this year's economy will be dreadful but not the same exact as the Great Depression, which is much worse. Still, we want to keep an eye on the housing market and stock market. We got to monitor them. You have me that promises to give you great and helpful information. You can watch my channel at any time. It's my goal to keep you guys updated on what's happening, like the world finance, out there, and updates on how the markets perform. I'm not surprised that there will be a huge global economic war as Switzerland has been since known as a neutral country. It doesn't participate in the EU. The NATO countries united and agreed to sanction Russia, and Switzerland got involved in the situation. Saying this, I can see that this is the beginning of the global economic war. I'm not surprised that other countries, such as China, will get involved. We will see more tension. The same with WW2. Okay, moving forward. Now I want to focus on me and you all, and how we can financially prepare for the war, as we see the capability of increasing the government debt and the interest rate being raised, and GDP will decrease. All of these means the markets will significantly drop. I believe it's the best for us to put all of our money into treasury bonds or other types of bonds. Since the interest rate is going up, that means the interest from bonds will increase. So, we will be getting more money from bonds. Plus, the government debt is getting worse, and they will need to use our bonds to cover their debt. Now is a good start to put all of our money into bonds. And a nice thing about bonds is less risky and more predictable since it's fixed interest. Once we put our money there, we will be getting the exact amount of interest after maturity. There are 5, 10, 20, 30 years bonds, depending on your preference. Plus, I explained to you that the tax rate possibly goes up. So if you attempt to sell your stocks, you will have to pay tax at the higher rate. Leaving your money in bonds, you can't take it. As the war continues, the tax continues rising. Once it settles down, you can take the money out of bonds and pay tax at the lower rate after the war if the tax rate goes down. So that way you can save your tax bill. As you can see that, bonds are a good option. Just have it in your mind. You can try to put money into the bonds. That's all for this video. I hope my explanation of my thoughts helped you to understand more about the crisis, like the political war and global economic war. I really appreciate that you could find your time watching this whole video. If you can, please do leave a comment on your thoughts on the crisis. Leave a comment, and I will reply instantly. See you all next time soon.